Hey everybody, thanks for joining. This is a quick market update for Walden and Lake Houston up in the Humble area, Northeast Houston. We're going to take a look at two quick metrics. My name is HanhJones. I'm with the Sweet Life Real Estate Group, JLA Realty, helping you live the sweet life. First metric that we're going to take a look at is going to be dollars per square foot sold. So we're tracking here how much homes have actually sold for. And to compare apples to apples, we're going to look at the dollars per square foot. This is including both 1 and 2 story homes. And taking a look at the line here in the blue, the line in the blue is last year's 2021. And we can see that there's been a steady trend upwards. Sure, there's some peaks and valleys, but steady trend upward to the low 100s into the mid 120s per foot. Steady increase across the board for 2021. But if we look at 2022 and looking at the first 4 months of 2022, it's been an incredible increase, right? Staggering increase. How much increase? Well, we went from 110 beginning of the year to mid 140s. If we compare that to 2021, yeah, we're looking at 26% increase. Staggering increase. Now, if we look at Harris County at large, it's about 16%. If we look at the Humble area at large, it's about 20%, and Walden is leading the way, 26%. So very impressive numbers from that perspective. The next metric we'll take a look at is going to be months of inventory. We ran this for the last 5 years to get a good comparison in terms of trend. And what months of inventory tells us is if buying continues at the same rate it is now, how many months would the inventory run out in, right? So this is an inverse relationship to price. So the lower months of inventory is, the more prices elevate. And we can see here in the chart that across the board, on average, in the last prior to the COVID pandemic, we were sitting about 3 months of inventory, sure, and it was a little volatile, but boom, as that demand for housing came in, we dropped below this 2-month mark, and then now we're hovering about 1.25, even spiked below 1. So what does that tell us? That tells us that the moment this thing dropped below the 2 mark, we saw prices increase pretty dramatically. And so if this continues to stay at these lower levels, these 1.5, even sub 1, that's going to tell us that prices are going to stay inflated, if not increase further, all right? Now, if we look at the red line here where it's the 2-month supply, if we start peaking back above that level on a sustained basis, we would see some, dare I say, softening in home prices, or at least some stabilization and flatlining from that perspective. So this is a metric that we're going to take a close look at moving forward, and just to make sure that, hey, where is the trend going? Right now, we can see the trend is clearly on the higher end in terms of prices. But as this changes, we'll keep you updated. And that's all we got. So again, I'm HanhJones, Sweet Life Real Estate Group. If you want to take advantage of today's real estate market and develop a strategy, either for buying or selling, please reach out. And we will see you next time. Take care.